Welcome everyone. My name's Shannon Smith, Founding Director of Transfer Pricing Solutions. Just want to talk to you today about a very common question that we get from a lot of clients throughout the year when we're looking at transfer pricing matters about, does your foreign parent company documentation provide you with Australian transfer pricing compliance? So I just want to go through what are some of the aspects to put you in a better position to firstly make sure that you know that you've covered, and secondly be able to communicate this to your foreign parent. So if I just go through a bit of background about Transfer Pricing Solutions, we have offices based in Australia and Singapore and Malaysia. We aim to provide practical, proactive and cost-effective transfer pricing solutions, have over 25 years experience and a very flexible team so that we can adapt to your requirements as required. Now, what I want to go through today is foreign transfer pricing for Australian operations, transfer pricing policy documentation, what is it that you're going to need, and then ATO recommendations and some other ATO guidance as well. So let's get started on the foreign transfer pricing and Australian operations. So a very, very common case study, and I'm going to use this as my example as I proceed through. Foreign transfer pricing and Australian operations, we have a US multinational company with subsidiaries around the world, including Australia, recently prepared new transfer pricing documentation. The company applies their transfer pricing policies on a global basis, and the US tax director has instructed the local management here in Australia, whether it be the tax director or general manager, to use this documentation to support the prices charged by the US company to the Australian subsidiary. Is this US documentation going to be acceptable in Australia? Now, this is a very common situation, so I want to use a little bit of a different analogy. Let's think of a child's passport. Imagine you're going on an overseas holiday with your parents. What's the one essential thing that you need that gets you into another country? Your passport. So even whilst travelling with your parents, would the immigration officer accept your entry into the country by only accessing your parents' passports? Clearly, the answer is going to be no. You must present your individual passport comprising of your unique passport number, photo, and other identification details. So using that type of analogy, the same concept applies with transfer pricing documentation. You may have documentation prepared by your parent entity with all the information of all the overall business operations and supply chain, but does that transfer pricing documentation actually reflect your local business operations and circumstances in detail? So there's several reasons why we need to have this documentation prepared that was prepared by your parent, but why it's not going to meet the Australian requirements. So I'm going to go through some of those now. So we need to have adherence to the Australian transfer pricing laws and regulations. So most countries do have local transfer pricing regulations in place that do require taxpayers to analyse and document their intercompany transactions. Australia is no different. In fact, the requirements under the ATO are fairly detailed and complex. Taxpayers that do not prepare transfer pricing documentation accordingly face higher penalties if they receive a transfer pricing adjustment that increases their tax liabilities in Australia. So we have our local domestic legislation is subdivision 815B, which is the transfer pricing rules. And so basically this is to ensure the amount of tax brought into Australia from cross-border conditions between entities reflects arm's length contribution made by the Australian operation. The amount should reflect the conditions that might be expected to operate between entities dealing at arm's length, so considering any connection within the entities and any other relevant circumstances. We do have extensive transfer pricing documentation requirements, which are outlined in tax rulings, so TR 2014-8 and subdivision 815B. So it really will add, unfortunately, to the ongoing tax and transfer pricing compliance costs. Without such documentation, taxpayers will not be able to defend their position in the event that in the event of an ATO review, and that penalties will be imposed following a transfer pricing adjustment. The ATO states that with having transfer pricing documentation in place, it will reduce the risk of an audit and dispute with the ATO, help explain the taxpayer's position to the ATO, and minimise penalties in the event of an audit adjustment. Having transfer pricing documentation prepared by the Australian taxpayer will also provide the ATO with useful information to conduct an informed transfer pricing risk assessment and a thorough audit. So you may actually be able to ease that burden, so to speak, earlier on by having documentation already in place and not having it progress further. You need to perform local benchmarking. So the ATO generally prefers Australian comparable companies during a review or audit. Where a regional set is used for Australian purposes, the ATO will focus on the Australian comparables and their relative position in that benchmarking set that you have. When needed, the ATO conducts its own analysis to identify Australian comparable companies for benchmarking purposes. Therefore, the benchmarking study conducted for the purposes of the global parent operations may not be acceptable for Australian purposes. You really do need to consider whether there are actually any Australian comparables available. So there are also one thing to be considered that's quite important is there are 5 comparability factors proposed by the OECD guidelines. If you have a foreign prepared benchmarking, they will not be analysed accurately between the Australian taxpayer and the global comparable companies that have been incorporated into the documentation. So the benchmarking study needs to be tailored to the taxpayer's circumstance, and our recommended approach is that you make sure that the comparability factors are actually addressed compared to the Australian operations, and this will provide you with a strong basis to defend if you ever have a transfer pricing challenge. So when we say the OECD comparability factors, what we mean characterisation of the goods and services, the functional analysis, contractual terms, economic circumstances, and then business strategy. So when you are doing a benchmarking, you do need to consider those comparability factors. And if it's been performed globally, they will be comparing those factors to the global operation. So what we're saying is you need to take those factors and compare them to the Australian operations. Having a transfer pricing documentation prepared for the compliance of a country other than Australia may lead to issues in enormous tax consequences and penalties in Australia. So taxpayers seeking penalty protection will need to keep contemporaneous documentation in respect to the conditions that are both material and relevant to their transfer pricing position for the relevant income tax year. So the penalty protection and reduced risk of an audit, looking at failure to prepare documentation contemporaneously in accordance with the Australian transfer pricing requirements. So what we mean when we say that, we mean having documentation prepared in place at the time you lodge your Australian tax return will prevent the taxpayer from establishing a reasonably arguable position. Because if you don't have documentation prepared, you won't have a reasonably arguable position, and it will prevent accessing lower penalties if the taxpayer does receive a transfer pricing adjustment. So penalties can often double your situation. So, and once you don't have it prepared, you can't fix it later. So if you get an ATO notice now, you can't quickly go and prepare it now. You can prepare the documentation now, and then we're kind of hoping that it comes with the right outcome, but it's still never going to be contemporaneous documentation. Locally prepared transfer pricing documentation does represent the local operations accurately whilst meeting the local transfer pricing requirements. This means the documentation will need to have an overview of the Australian business operations, the industry in which the Australian entity operates, and information on the local competitors, customers, and suppliers. The local documentation also provides the ATO with access to the financial performance of the business in Australia compared with the Australian market. Disclosing the details of the Australian operations only as opposed to the global will render the ATO less likely to probe further. If you've only got the global operations, they will actually reject the documentation and say that you haven't addressed and satisfied 815B, which are the Australian transfer pricing requirements. So that actually, and those requirements, I'm going to go through now what the ATO requirements are and what they expect for the documentation. They expect your transfer pricing documentation needs to have answered 5 questions in accordance with TR 2014-8. What are the actual conditions that are relevant to the matter or the matters? So what actually happened? What were the actual transactions? Who did what? Where did they do it? What actually happened? What actually were the actual transactions? Who did what? Where did they do it? What actually happened? What were the actual transactions? Who did what? Where did they do it? What actually happened? What actually were the actual transactions? Who did what? Where did they do it? What actually happened? What are the comparable circumstances relevant to identifying the arm's length conditions? So this is where we're really trying to look at, well, what are the comparability factors in relation to those transactions that we may be able to use when we're looking for the arm's length situation? What are the particulars of the methods used to identify the arm's length condition? So this is where we're looking in relation to the Australian operations, what is the most appropriate method, and going through the various methods, making sure you've addressed why a method was selected, why a method wasn't selected. What are the arm's length conditions, and is or was the transfer pricing treatment appropriate? So this is where the economic analysis comes in, the benchmarking, to say, look, we've looked at it and said, well, what actually happened? What were the key factors, the comparable circumstances? What was the transfer pricing method? And then we're testing it to say whether it was appropriate or not. And then lastly, have any material changes or updates been identified and documented? So those are the requirements that we need you to have in your TP documentation. Some of the other ATO guidance that is available, the ATO has set out various practical administration approaches to assist taxpayers in complying with the relevant laws and also reduce the compliance burden, which is seen as low risk. So we've got simplified transfer pricing record keeping options. You can actually, that'll give you reduced transfer pricing documentation and increased certainty, but you do need to have met the criteria to be able to do that. So it's important to weigh up the convenience of retaining a transfer pricing documentation prepared by the parent company versus the consequences of non-compliance with the ATO. A locally prepared transfer pricing documentation will focus on the local operations and will comply with the relevant Australian transfer pricing requirements. So what we can do, if you do have foreign prepared transfer pricing documentation, we can leverage significantly off that and bring in basically the 5 questions, the 815 transfer pricing legislation to make sure and take your global documentation, find out the facts and circumstances of the local operations here in Australia, and then make sure that we're applying the legislation to that as well. So having that documentation in place is obviously going to be a benefit, and we can leverage off that. And we're happy to assist you in preparing your Australian transfer pricing documentation. So please do get in touch. Contact us if we can be of any assistance. And if you do need us to communicate with your foreign entity to try and let them understand what the requirements are from an Australian perspective, please do reach out, and we're happy to facilitate in that as well. Thanks very much.